Tiny teapot oil refineries in China quietly swallowing 90% of Iran's oil export, all while Russian tankers slip through the same back door. How are they doing it? And why is everyone paying in renminbi instead of dollars? Stick around because the story you are about to hear is wilder than a heist movie. Since 2014, the West has tightened sanctions on Iran and Russia, cut them off from dollars, blocked their banks, capped their oil prices. Game over, right? Wrong. Enter China, the master tightrope walker. Beijing wants discounted oil from its buddies and cordial trade with Washington. Solution: a parallel marketplace denominated in renminbi. These aren't your grandma's teapots. In Shandong and coastal provinces, independent mini refineries process 400 to 600,000 barrels. Small enough to dodge scrutiny, agile enough to pivot overnight. So how do they avoid getting caught? By mislabeling cargo, turning off AIS transponders, crypto and barter ledgers, and there you have it. 90% of Iran's crude ends up here, reformulated and shipped out as blended Asian fuel oil. Iranian tankers flick the off switch on their GPS. When they pop back on, they are magically from Oman. Meanwhile, payments flow through China's state banks. Until December 2023, when fresh secondary sanctions spooked 3 of the 4 big Chinese banks into pausing those wires. But private traders still partying. Because renminbi stays in China, Iran can buy Chinese steel, electronics, even subway cars, yet struggle to spend that money elsewhere. Clever, huh? Moscow saw the script and yelled, "Roll camera, shadow fleet." Discounted barrels at $15 to $30 below Brent surge in renminbi trading on Moscow exchange. That's like buying an iPhone for the price of AirPods, then flipping it for profit. Why risk it? Because China transforms cheap crude into premium petrochem and sells it worldwide. The margins are delicious, but the balancing act is razor thin. One wrong move and Washington's hammer could hit Chinese banks again. And remember, global demand for renminbi is still less than 3% of international payments. If buyers stop accepting it, the whole workaround collapses. So next time you fuel up or scroll oil prices, ask yourself, which teapot filled this tank?